Hey traders, Raghi here, and in this update we're going to talk about the continual compressed narrow range that we're seeing in the indices. Narrow ranges are probably the most difficult market to trade. Uptrends, awesome. Downtrends, tradable. Even chop has movement that offers us follow through. The reason that this kind of sideways market, neutral market trend, blue grab candle after blue grab candle, narrow squat bodied candles. What don't we have here? We don't have follow through. So if you're looking for movement outside of the range, you're going to be really frustrated. You're probably getting whipsawed where it looks like it's momentum and then it just fizzles out. This is a frustrating market. But the way that we fix this, right? We don't have to stay in the daily frustration mode. We can just move on over to, all right, well, if we're not going to get a follow through in the daily time frame, let's shorten the time frames and say, all right, if I've got a range that simply won't move enough on the daily, let's look at the 5. And that's exactly what I have here. 5-minute time frame. We've talked quite a bit about summertime day trading. Well, that's really a seasonal thing. It's the season where volatility tends to contract, volume tends to contract. So day trading is a consideration come Memorial Day to Labor Day anyway. But then you add the current market environment that we're in, it becomes a no-brainer, especially if right now you're frustrated with a lack of follow-through. I was. So what did I do? I shifted right into that gear. So let's talk about what we did this morning and how we did it. Well, what we did was we day traded the S&P. Now there are a few key things that we're still going to be able to discern from the daily. So don't ditch it. Don't think the daily's useless. Just don't look for setups and trades on the daily. Look for levels where we can get some clarity. So keep this number in mind, 4116 and a quarter, right? And you can see that line right here on the daily. That level gave us a line in the sand. Below that, bearish. At that, resistance. And here is where we shorted. Now, if you take a look at that level, well, that in and of itself may not even be that interesting, but if I can give meaning to that level, and the way that we give meaning to levels that kind of seem invisible to most other traders, is we ask ourselves, what time is it, and what kind of volatility could we expect at this time? And that's exactly what the HPMR said. HPMR said, here's resistance because this is where between 9 and 10, we're expecting to exhaust. And because we had bearish buys, because we're at this resistance level, that puts the pieces together. Now, it wasn't just one time. We're not looking for frequent in and out trades. Pick a side and work that direction. Day trading is not about frequency of trades, gang. The only person who's going to be happy when you're in and out, in and out, in and out is your broker. And let's face it, we're looking to grow our accounts, not buy them new Corvettes. All right, no offense to them. We're looking for that edge. And there are 2 examples right here in Thursday's session alone. Time and volatility, time and volatility. Now, the other thing we want to remember as we're dealing with day trades is every single day we get to wake up and deal with a brand new, fresh, clean slate. So if we happen to break down on the daily, if finally we get the follow through, terrific. We could add the end of day daily swings back in. But that doesn't mean we need to stop looking at the short-term time frames, because now we've got clarity. Maybe we'll get that, but we can have clarity on both sides. But until that time happens, until volume comes back into the market, be open to those intraday setups. Now, one other thing, not only do we have the time and volatility entry, we also have the support, right, to give us targets. Because just like time and volatility can give us resistance, it can give us support. So you'll notice these on my chart because this is exactly what I'm doing. I'm decoding what's happening with time and volatility because we don't want to be frustrated by the market being stuck. And it's not just the S&P, gang. You'll see it on the NASDAQ. You'll see this in individual stocks and ETFs. So the same thing applies, right? It doesn't have to be just indices and futures. It can be currencies. It can be sectors. It can be individual stocks. So keep that in mind. Everything is going to have some sort of time and volatility implication. And this is how we're decoding the market without getting whipsawed and without getting frustrated. So shorten that time frame, find those zones, and I'll see you all in the next update. Oh, by the way, before I forget, we've got, well, if this is sort of appealing to you, how can you trade this current volatility? You're seeing how I'm doing it. Those were trades from today. On Thursday, June 16, 8 p.m., mark it down on your calendar. You can register over at www.simplertrading.com/price. If you can make it live, awesome. We have a very interactive webinar. If you can't, register because we'll send you out the replay. But that's going to be next Thursday, so a week from today, 8 p.m. Eastern. I'll see you on the next update. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.